guess what? There's a bit more money in bridging finance. I love being able to shape a deal.
With over 20 years in financial services, Director of Sales at MS Lending Group, you lead a team focused on delivering fast, flexible, reliable bridging solutions.
There's no USPs in bridging. There's no USPs because bridging itself is the USP. And what I didn't realise was happening on the day, there was 114 people in the room and they were giving you tasks, and suddenly there was less of you in it. I didn't realise they were dividing them up into each room to actually kick you out. It's been nice to stay humble. I've seen brokers shout and scream at underwriters, and the next minute they get on the phone to me and they're all nice. I'm like, don't treat me any different, or them different to me, because there's always someone better than you. I don't think I'd want a robot making the full decisions for my bridging cases at the moment, because I'm that flexible on them. So how am I going to feed that into an algorithm? No, Elon Musk would tell me that's easy. I definitely think always have a plan B. If you're risk averse, this is not your game. If you're thinking of getting into it, you know, it's lean on.
Before we get into the episode, I just wanted to say that Property People has been going for over 5 years, and I've come to know that over 71% of you still haven't hit that subscribe button. So please, I ask a small favor. If you could take a moment and hit that subscribe button, I'd be ever so grateful. And in return, I assure you that I will do everything in my power to make this podcast and YouTube channel the best it could possibly be. We'll get bigger and better guests, and we'll go more places together. Now, back to the episode. Hello, everybody, and welcome back to another episode of Property People. Today, I'm delighted to be joined by Mr. Jamie Pritchard. How are you today?
I'm really good, thank you. Thanks for having me on.
Thanks for traveling all the way from the nether regions of the country.
Northwest.
Oh, Northwest. Traveling here down to Hampshire, where we are based. And sharing some insights into the world of real estate finance, property finance. So a quick introduction for you. You're the Director of Sales at MS Lending Group.
Correct.
You lead a team focused on delivering fast, flexible, and reliable bridging solutions. With over 20 years in financial services, is pretty impressive. And I can speak from firsthand that you do very much lead with a hands-on and people-first approach. That is very true. Having worked with hundreds of brokers over the years to secure funding in complex and high-pressure situations, it's great to have you with us.
Thank you.
And before we get into all of the property finance, because I always think finance is one of the three pillars of doing endless amount of deals. You've got to have the money, obviously. You've got to be able to find the deals, and you've got to know how to add value to them. Mm-hmm. So funding is one of the three pillars. And I, being a broker, get regularly asked, you know, where is the money? How can I get the money? Why is it so hard to get the money? So you can hopefully shed some light into all of that. But before we get into all that, I think I would like to know a little bit more about you and what type of person you were at school initially.
School, there's a good question.
Were you mischievous? Were you studious?
A little bit in between both of them, to be fair. I was really sporty. And I know you can't tell by the size of me now, but I was really sporty. So grew up in South Wales, which is rugby country, so rugby and football. Did tons of that, any waking hour. And then I was lucky enough to, with my dad's job, to be taken to Belgium. So we lived in Belgium, grew up in Belgium for about 5 years in Brussels. And that was really good. British School Brussels, where I could play rugby. So I think it was all around sport. I was always, I think my dad always had it in the head that I would have to go to university. So I was always aiming to do that, but I had it in the back of my head I was going to be a sports person. So I don't think I was too mischievous, but I've always had that sort of personality that was, it's always up for a bit of a joke.
And so did you do it like A-levels, GCSEs, university or anything like that?
Yeah, I'd done GCSEs, stayed in Belgium. My parents came back, did them over there. So sort of lived on my, with surrogate family for a year there. A-levels back in Chester. University down in, I was only talking about that this morning actually, in Staffordshire, in Stoke. So,
what did you study?
Well, you'd think it was finance or economics, but it was sociology. So,
yes.
Yeah, nothing to do with finance. Although I always try and lead that back into so my dad doesn't think that he wasted any money, that it leads me better with people than understanding.
I think so. I think, and society in general, and how it works, and the ebbs and flows of it all. After the university, sociology, How did you get into the property finance? Finance.
During university, actually, I worked for MBNA Bank up in Chester, so in a call centre, so Bank of America, and lots of people in Chester have done that. And I went to a sales recruitment company just as I graduated, so for some reason went to a sales recruitment company down in a company I don't think exists anymore called Metamorphose, down in Cheltenham. And what I didn't realise was happening on the day, there was 114 people in the room, and they were giving you tasks, and suddenly there was less of you in the room, and then kept on being less of you after each task. And I didn't realise they were dividing them up into each room, probably after the first 2 tasks, to actually kick you out. So they were looking for salespeople. So they would not just recruit you into a sales role, they would have all this, we'll teach them to be the salespeople, graduate salespeople of the future, and all that. So I think there was 11 of us left, and they asked me, I've said it before, but they asked me if, do I want to work for Standard Life IFA accountant? I was like, yeah, brilliant. And I couldn't even ask Google back then. I think I asked Jeeves what IFA was. That's how old I am. So, what's an IFA looking at? And I just fell into finance that way, really. I don't put the MBA bit as a finance. I put that as just call centre. But that helps you with sales, the account management at Standard Life, yeah.
Standard Life. So what is it, like insurance?
Insurance, investments, with profit bonds, all that sort of stuff, yeah, shares. So it was a graduate account manager. I moved down to Birmingham, went and worked down there for a year, just on sort of helping out all the team, pretty much doing all the menial jobs, isn't it, to learn your craft. But that's a similar role to, the BDMs that work for me. It was the BDM role, but for IFAs, for independent financial advisors, basically. So did that, few years. And then actually went up to Edinburgh to live there for 2 years doing endowment complaints with Standard Life, which was a big thing back then. Remember that? Again, that's
sure there was a lot of those as well.
Yeah, endowment complaints, pension complaints. And I saw a load of these guys, financial advisors, who were getting contracted. So I was on, 16,000 odd a year back then, yeah. And these guys were earning 350 quid a day doing the same job as me. So I just went and found a way of doing that, which is a long way round saying by doing a lot of that and setting myself up my own company was my first way of getting deposits for property.
Fair play. So you started investing in property yourself? Or
yeah, I've done investment in property in the past.
For better or for worse? Some people come out of it like quite
always
scarred
for good.
by it. Or...
Always for good. I think there's different ways. I think everyone's always got to fit to their own business model when it comes to property. So you can watch loads of things online. I think loads of people can get hooked up to watching the Channel 4 programs and think, I want to do that, which is great. But you've got to have your business goals and models of what you want to do. So same way, I heard someone the other day say, you should get into HMOs. But what if HMOs is not right for them?
Yeah.
Why are they suggesting that? So you need to come into it eyes wide open. And I don't think in your 20s you're pretty much eyes wide open fully when it comes to that.
No, definitely not. I think back in my 20s when you certainly think you know it all, or you've been around the block a couple of times at the very least, but in the end, I'm 42 now, so I'm like, wow.
Spring chicken, Sam, honestly, compared to me. But yeah, about 2 minutes ago, I think I was in my 20s, but you do learn a lot along the way, and I was lucky enough to work for lenders who understood property, glad they did, but really understood the lending side. But I think it really kicked off of when I joined Precise Mortgages, and obviously that's a specialist lender, really in the infancy back then of what it is now, and working with people like Roger Morris and all that, and that's where sort of the bug got into it with buy-to-let and all those areas, to be fair. So.
Yeah, Precise now in the specialist buy-to-let space is one of the biggest names.
Yeah.
And so having that experience, so you got in relatively early and was able to watch it grow.
Yeah.
Why did you leave Precise?
So Precise was, a few things before that. I think what was really good with what happened with Precise, because remember, buy-to-let used to be the thing that underwriters used to cut their teeth on. It was the simple side of lending compared to sort of the residential.
Right.
Then George Osborne obviously opened his mouth in 2015 and changed all the tax rules, and it became much more complicated to lend on. But with everything like that, it became more opportunity for specialist lenders. So we built up a real sort of culture of education at that time to build up what was happening with the tax rules, not giving tax advice, but producing new products like limited company buy-to-lets, which were not big thing back then. I remember a broker saying to me back then, oh, did you all invent that limited company? I was like, no, CHL in the first rung were writing those back in 2001, but it's now a thing because of the tax rules more.
Right, yeah.
So, we had a really good stint of it there, of building up the book and really getting around and, like you said, knowing hundreds, thousands of brokers, got known for doing the circuits, doing workshops on how to build your portfolio, do buy-to-let, whether that be in limited company, in corporation tax relief, in personal ownership, for all these things which I'm not giving advice on. It was there. And I suppose what happened after that was that there was a merger between Kent Reliance and Precise and Interbay and all those brands. And I love building things. Absolutely love building things when it comes to sales teams and all that. So the choice was to leave OSB at that time after a year. So that was during COVID, actually.
Interesting. So one savings bank, and they did this merger, and then it became a little bit more corporate. It was already kind of built.
It was always corporate because Precise, well, it wasn't always corporate at Precise, but we built up to do IPOs. We went to bank stage, and then after bank, when you're on the stock market, they don't want the volatility of you bringing in, and being a maverick in that sense. They don't want volatility. They want harmonious stability, predictability of what's going to be brought in, which they do extremely well at. So after that, I was managing the sales team of, I think it was up to about 18 people in that sales team. And part of that remit was buy-to-let, residential, so the homes we all live in, plus second charges and bridging finance. So when I was looking to go back out, I wanted to go fully just bridging finance.
Okay.
Yeah, and that's the sort of route that
why was it that bridging finance kind of piqued your interest?
The reason that I like bridging finance, I do a wry smile because one of them is, guess what, there's a bit more money in bridging finance as well. But the real answer is I love the malleability of it. I love being able to shape a deal. So if someone comes to me and say, I need this in 14 days, I need this in 30 days, but I haven't got enough money at the moment, I need to draw, and you're actually cross-collateralizing against other property. You're actually trying to shape a deal rather than saying, does it just fit this affordability? You can either have that mortgage or not. I think there's something a little bit more, less order taking about it, a little bit more.
No, I agree with that, actually. I mean, the bridging thing for me is, I find it easier sometimes just to tick boxes and, grow with the criteria and you get residential buy-to-let. Seems a little bit easier, whereas the bridging is a lot more creative and there's a lot more different solutions.
I call it a lot more creative, but also I think you can see where the solutions it provides for customers really well, and you can tell that because how many other lenders are in there as well. There's a plethora of lenders out there. And that means that you just have to be at top of your game, customer service wise, or know your product and what you want to do. The aforementioned funding needs to be right as well. Liz Truss showed us all about funding and why that's really important in the market. I know we've talked to somebody who sees that as opportunity. There's always opportunities in the market. But we're working for a lender as I do now for MS Lending Group, who are able to absolutely know what they can do, get the money out, really quickly, complete on absolutely tons of deals per month. It's really inspiring what Michael Stratton has built up and the team have. And it's just great to be part of it now to actually take it onto its next stage of growth.
And so, because I think one of the things when you've been in any industry or any profession for as long as you have is that you got stepping stones that get to you to kind of where you are today. And you've worked with some pretty big brands though as well. So from Precise, Glenhawk's in there as well. Yeah,
absolutely.
And how long were you with Glenhawk?
4 years at Glenhawk.
Yeah.
So Bridging Lender of the Year 3 years in a row, which was the first that has ever happened. So
that's
we were all proud of that. And the reason, obviously, with not obviously, because people won't know, listen to this. I would live in the Northwest, as we said earlier, but Glenhawk based in London, and I love being around the operation, the team, and everyone, and understanding it. And MS Lending are in the Northwest, so it's a perfect fit.
Easier.
Perfect fit.
Yeah, that makes sense. But the similarity between Glenhawk and now what you're doing, certainly at MS Lending, is purely bridging. There's a big focus on that.
Yeah.
Not so much the term loan lending.
I think that's important because and there's some lenders who are extremely good, and I'm never here to look at other lenders and say what they're doing. But I think if you try and shoehorn one of your processes, whether that be buy-to-let into bridging or vice versa. I think that can be dangerous sometimes.
Yeah.
When you're really good at something, stay being really good at it. Stay in your lane is one of my phrases I use a lot. So that's what MS are really good at, because you've just named 2 lenders there, but you name others. What MS Lending Group don't want to do, and we're not doing at this stage, is any sort of drawdowns against GDV, or we're not doing development. Bridging actually as a term at the moment is such a wide term, because you'll say, do you do bridging finance? Okay, what type of bridging finance do you do? Is it regulated? Is it unregulated? Is it residential, commercial?
Exactly.
What can you do with it? Can you lend against GDV? Can you draw down?
Some people throw a little bit of refurb into bridging as well. I'm like, oh, is that a refurb bridge as well?
Well, there's the fateful question then, isn't it? Light, medium, heavy.
Yeah, exactly.
What's yours heavy? And you go, well, my heavy may be different to your heavy. And, my view of it.
Because for me, that refurb finance is effectively development finance, just on a smaller scale. And bridging finance is just the acquisition, and that's what we're doing.
And I couldn't agree with you more. It's in different places I've seen where the lending criteria is, it's still classed as bridging, but you can increase the square footage of the property by, say, 50%. Well, that's pseudo-development. Well, it is development. It is development, and that's different type of bridging entirely, and some lenders out there are really, really good at doing it, but that's a different sort of scope going back to that business plan of the customer, of understanding that, there's your costs. You have to understand your works. You have to understand your schedule of works. You have to understand what your contingencies are definitely going to have to be. But you're going to have extra costs of QSs going to go out and see them, or maybe asset managers and legal costs of each turn, and I think at the moment where we're set up at MS Lending Group is that would probably slow us down a little bit and stay in our lane.
Yeah, that makes sense. I mean, the bridging industry gets a lot of noise these days, I think. And I think there's a lot of...
Good or bad?
Overall good, I'd say. I think there's a lot of brokers as well that get a bit bored of just doing residential mortgages and getting very, very low proc fees. So they get a bit excited about the big money that can be made in bridging and the quicker turnaround and stuff. But it is fraught with all kinds of pitfalls as well, because it is a lot more quirky stuff and grey area stuff. The amount of bridging lenders that can pop up and open up as well, because again, the attractive returns that can potentially give you is crazy. One of the things that a lot of people talk about within this space is the unique selling points of a bridging lender. Like, what should a bridging lender shout about being their unique selling point? Like, for one of them that some people talk about is speed. It's like, oh, well,
but
of course
there's no USPs in bridging. There's no USPs because bridging itself is the USP. Because if I said to you, which we are, because you mentioned the 3 words, we're fast, well, someone else is fast as well. No, there's not many lenders that are fast at the moment. You name me top 5 that are fast, and you won't find loads. But I think it comes back to that word again I use, is education, that the more brokers who are trying to get into the market, great, as long as they're educated and they know what it is and they're putting their customers onto that bridge with eyes wide open, that they understand what they can do. They've established exits or plan B exits and all those routes that it can be. We would like to think, I think the USP generally is for any lender, and it should be the people in them, because it's a relationship scale.
Yeah.
So you need to be able to, like you can, Sam, ring me up and say, like, there's going to be deliverability, because you know that I understand and can shape the deal at the front, and you can say to your customers, we're dealing with a proper person, We're dealing with a proper company, proper people who understand it. Not terms on the back of a fag packet, not things that you think that could fall over at the 11th hour because we just don't like it anymore. That is not the way that we model ourselves at MS Lending Group. Now, that's the USP, because even when the reasons that people use us, which is desktop valuations and AVMs, and your investors will, prick up their ears to that, I'm sure, that's what makes us really quick, makes some of us really quick. But that's why we're lending, 70 deals per month.
Yeah.
Just in and out. One of my BDMs calls it bullet bridging. I quite like that.
Bullet bridging.
Yeah,
that's
I quite like
great.
it. I like it. I can't own that. Adam owns that one.
Very good. The whole speed thing is, like, people ask me how quickly can you get a bridge done. I usually say 2 to 4 weeks, but apparently there's a statistic out there that says the average is 56 days.
Yeah.
Have you come across that? This episode is sponsored by Merry Oaks Property Finance. Merry Oaks Property Finance is a finance brokerage, and we specialize in property finance for investors, developers, landlords. So anything from buy-to-let, bridging, development, commercial, HMO, short lets, hotels, the whole 9 yards, we can support you on whatever funding requirement that you need. If you have a funding requirement, please do reach out to us in the show notes, and I hope to hear from you soon. Now, back to the episode.
I have come across that because I was on the what is now known as the BDLA. So I was on ASTL, as it was known, Association of Short-Term Lenders. So with the membership that is on ASTL, and Vic Jannels has done a really brilliant job there to support the industry. We used to have the data from all the firms there, and that used to show it was around 56 days, if not more, on there. And there's a lot of areas. That's why it's really important to pick your lender correctly, isn't it? So who will it be? What's all those things that can cause those problems? Well, it could come down to the customer themselves, not supplying you with the right stuff that's needed. Dare I say it can come down to the broker, not yourself, Sam, not Merry Oaks on this, but it can come down to them not understanding who they send it to or what they're doing with the deal. That can happen.
Yeah.
And then it comes down to the lender themselves. Communication is key all the way through. Documentation. And then you've got the solicitors that you're in bed with, then the valuers. There's a lot of people that can actually elongate that process in there. So that's why it's really important to probably use NS Lending Group.
Absolutely. And the funny thing is, there are a lot of variables. You've got solicitors, you've got brokers, you've got the borrowers themselves, then you have got the underwriters and stuff, valuers, and a whole bunch of other stuff. And if you take an average, yeah, sure, there's probably a lot that do get done in 2 to 4 weeks, but there are some that just get dragged out. Maybe the seller's not, in a position to sell, and we're getting a bridging loan, but it's actually, we need to wait for them to do something else because it's in a chain or something.
My average is 25 days, by the way.
But that's what I was going to ask you next, actually. I was like, do you have like a statistic that you guys...
25 to 28 days. It's movable in there. It's usually...
2 to 4 weeks, basically.
80% of my deals that come in will have to be recycled again, and my pipeline just kept on growing because it's out within that month.
Auction finance, if somebody wants to buy something from an auction, what's the best way to approach it from your point of view? Because we sometimes get that where somebody says, I'm looking to buy this from auction, but there's a lot of competition, so you can actually do a lot of work and analyze something to the nth degree, and then they don't even win it in the end.
Yeah, I suppose if I'm coming at it from an investor perspective, it's do your due diligence first of all and know what you're wanting to buy, so you don't turn up at the auction or invariably going onto the auction site and overbidding for something. I always talk about reverse engineering. So if you do win, and I'll come back to the sort of question point in a moment, but if you do win, really reverse engineer, know what your plan is with that property that you're going to be buying, know how you're going to exit it. Are you flipping it? Are you going to be keeping it as either a commercial term, or you're going to keep it onto as a buy-to-let, or you're going to be converting it? All those things are important, but look, I'm giving out terms a lot a day, which are for auctions, and I know they're not going to win it, but I know that they're still going to win something at some point. So I think it's a little bit of a long game. What I find is, when they do use you and they know and they get generally the bug for it, they'll repeat use you then, because they'll actually have that confidence that they can, you can do it in that time, because there's a lot of risk when they do win at the 10% down, isn't there? Plus other fees.
That's how I normally speak to clients, investors, developers. I tell them, look, based on what you're looking at here, this is probably what we can do. We can get you some terms as well, but we don't want to waste loads of lenders' times. I can give you a good gauge.
Or your time.
Yeah, exactly. Once you win the bid, literally the first call you make, give me a shout, and I'll make sure that we get some terms out to you in the next 24 hours or so.
So I look at it as an urgent deal as something with not working days, 14 days, and you need it completed within 14 days. That's what I see as really urgent. So people ring me up and they say, I've got an auction deal, but it's really urgent. I said, when have you won it? Today. So standard process. I can get you all done with that. But, and that would mean that I get the application in. It's not overzealous. I'm not going to take you through my whole process, don't worry. But, there's no legal undertaking for ourselves as well and that. So we can just get it through the process, and I know that people will jump on it. But if it's something where it's fallen over with another lender, or the customer has invariably not called you for that week or two, or thought they could shoehorn it into a buy-to-let with another broker, and now they want to, quick funds, then, you can start, it's getting the legals instructed day one. You can get the AVMs, the desktops. It can all be done really quickly if everyone's got the information on point.
Tell us about those valuations and the AVMs and the desktops. So, for those who don't know, what is an AVM? How does it work? Different lenders work AVMs in different ways.
Yeah, they use, some don't use them. So, find out if your lender's using them, I think it's the first of all, because I think all these things come down to cost and time. So a valuer needing to go out to a property is going to cost you more than what a automated valuation is going to cost you, because with AVM, it's basically working a data model of what confidence they've got in the market there, looking at what they feel that property is valued at. So residential property in Fleet is £500,000. You've bid for it. We'd run the AVM and give ourselves confidence whether it's worth £500,000, should I say. We can get that answer back instantaneously for you. Now, if it doesn't fit into where we feel it's confidence, then we could instruct a desktop valuation on that as well. And basically, a desktop valuation is a remote valuation. So a real person valuer looks at it through one of the panels out there. We use Validate or VAS panel, but there's other panels out there. And generally what they're looking at with that, whether that be commercial or residential, they can look at the property with the photos. They can have a video walkthrough of it. Remember, if this is all online and on Rightmove, you've generally got that on there anyway with the square footage, and they will just do a valuation. They're just not putting boots on the ground. And you get that back within 2 days.
Yeah, because it's still a physical valuation in terms of somebody's doing it. It's not a computer, but they're not actually going out to site.
A fraction of the cost. So I picked up one the other day where the commercial valuation for semi-commercial property was going to be over £3,000. And our desktop valuation was £600 plus VAT.
Yeah, fraction.
A fraction.
Valuations in general. Lenders, valuers, borrowers, they have this love triangle.
Yeah.
In terms of how many valuations do you do a month or a year, from your experience, that get contested, and of those, how many are successful?
Not lots, to be fair. Generally, because a lot of our areas are done on AVMs, a lot of them are passing. Some of the desktops, and if the AVM's not passing a sort of confidence score that we want to use, then we can go to a desktop there. The ones that I see generally are ones that are way off.
Yeah.
Absolutely way off. And generally on a refinance rather than a purchase.
Yeah,
so purchases generally stack up.
Yeah.
So that tells you that somebody is maybe overinflating what it may be. One I had recently, actually, which was up in Scotland, where it was a purchase of a big commercial site. But what kicked that back was that and for everyone listening, it's not just valuing the property on maybe a market value, it's more valuing it on what it would be 180 days if we had to dispose of the asset within 180 days. And then the 90 days. And what really affected that was that the 90 days was such a low percentage compared to the 180 days. That's where we had to go back. And we did contest it, but actually the valuer come back with some really good information on it. Now, you can see it from both ways there. You can see that you can either think the customer's thinking, God, that's not fair. I wanted it for £1 million to be valued. But you can also look at it as, we've just actually showed you that, there could be a problem with this. And actually, it's giving you an opportunity to go back and actually negotiate with the seller themselves. So there's two ways of looking at it.
Yeah, together, they've got this interesting thing whereby if the 180-day and 90-day is over 10% difference in value, they'll just work off the 90-day value.
Yes, generally about 15% with ourselves, 10 to 15%. But go back to one of those first words you use, it's flexibility. So we don't underwrite, definitely don't offer tick box. So if you've got the case scenario, whether that be something to do with the valuation, we'll have a look at that valuation and what we feel it'd be beforehand. If the 90-day is around that level, then we will talk and speak to myself, Michael, Mike in underwriting, and Sam to see whether we feel that actually would we be comfortable still working off that value. So we're not a big behemoth that goes, no, that's 0.1% over that side. We're always working with you to write that deal.
Yeah, I think that's one of the beauties of having more specialist lenders, more boutique lenders than your big kind of high street banks and stuff. That you can be a little bit more flexible, a little bit more open-minded,
Agile-minded.
Yeah. I mean, building a lender's reputation is tricky at the best of time. It takes hard work. What hurdles have you faced over your time being at different lenders to make sure, and you've got a good reputation, you maintain a good reputation? What are the most important things?
That's a good question. I'll answer it for myself, but I'm thinking of it from I like bringing on sort of younger new BDMs, and, not all of them, some of them have an idea of what they feel a BDM needs to be, and then find out it's a lot different. I think you have to build up trust with the brokers, and that's not done day one, isn't it? And I think where you have to build up that reputation is from actually learning your craft. So I mean, learning the background, learn about. Let's take Pritchard as an example. Try and learn it inside out. And I don't just mean about the product. You should know your criteria inside out, but learn the other lenders' criteria.
Yeah,
learn where the bits that you know. And I don't mean sell against them as in they're doing rubbish, but we're good. But find out what their process is and then go, oh yeah, who are you using at the moment? If they use such and such, I already know why they're using them, so I can feed off that. So that's where I've done it and built up a lot of that experience and that trust. Is really building up your black book of brokers, and LinkedIn's the best tool for that. It always has been. Where you used to have in the past have to have your BlackBerry, again a sign of how old I have. With all your contacts on. All your contacts are on LinkedIn now. And most of them have got their phone numbers on it. So being able to, when you're at a new lender, anytime, when I joined Precise, when I've joined the last company, when I've joined MS Lending Group, is just being able to reach out to people when you can on that. But it's also then getting to really understand and build up the reputation internally as well as externally. So, not trying to have, this is an urgent deal every time to your underwriters. It's actually working with your underwriters out on every case. And, I think they build up the trust with you then that you've got their back in situations. And it goes on from there, really, because I think when I first ever became a BDM at Principality Building Society all the way back in the day, I was wondering why some of the older than me, probably same age as me now, BDMs used to go, well, you're dealing with the brokers, but why you got really good relationships with the solicitors and the valuers and all that? And I was getting that they were trying to control the whole customer journey. So then when I'm working with yourselves, you can say, who can you lean on? Who can you help? Who do you know? And it's just building up the contacts. I think. How can you undo that? By, letting them down, not answering that call, not, telling them the wrong information, doing everything I've just said in reverse and not doing it. And, you won't trust me then, will you? Or any representative, if I'm not giving you the correct answer or not helping. It's
true. And, having worked with so many lenders over the years, I find that the slow, painful no is really... It's hard to get over. It really is soul destroying for not only for us, obviously, more so even for the borrower, because they're the ones going through it. They need the solution, and you've been asking them a bunch of questions, and time again, they think that they're getting closer to what's the day we're going to draw down, and then they finally say, actually no, but we can't do it,
and then go missing.
Yeah, and then the lack of communication. I've had it. The longer you're in the game, the more you've had kind of like seen it all type of thing. And it's painful. The urgency thing's interesting though, because we do say Merry Oaks that everything is urgent, but some things are more urgent than others.
But it is, bridging by nature sometimes is, most of the time is urgent, because if you're saying auctions or you're trying to, get that below market value deal or wherever it is, you've got, the vendor saying you've got to have it in a certain time, or the auction saying it's 28
days. The administrator's
days.
knocking on your door or something. There's something gone wrong that you can't just get.
Or it's
normal.
a rebridge,
exactly,
you're going to get charged a fee, and there's no extensions, you need to do it. The ones who sometimes say it's really urgent and want you to instruct solicitors then, sometimes actually when you offer it, that's the time frames then, it goes on for ages, and I'm ringing them up going, I thought this one was urgent as well. There does need to be a priority sometimes, and that's generally, the one makes me laugh with that is urgent, and you went, when's the completion date? ASAP. I really do need a date. Just give me it. If it's 5th of September, if it's the 20th of September, when we're filming this at the end of August.
That's very interesting you say that, because Andy Reid from Tab was with us as well not too long ago, and he said the same thing. He said, look, anything that with ASAP, I will admit that we've been guilty of saying ASAP, but we are stopped since Andy said that. Now we've had 2 people mention it. It needs a date, to be fair, because otherwise what are we working towards?
Give me the date. Give me
Some
the
people
date.
say yesterday, though. That's why I told them.
But
doesn't really help.
if it was yesterday, they've either already paid their 10% down and they've lost the property. So it's not yesterday. They've renegotiated it. When is it? If it is actually
There
a
is
week's
going to be a
time,
hard stop date of some sort.
there has to be a hard stop date, and just say that is the hard stop date. That is when all the stuff hits the fan.
Yeah.
That's what. Yeah, Andy's right there.
No, I agree. I think by nature, if you're in a bridging loan, then there's going to be some element of urgency for the most part. But we have to be able to work together. And it's all about communication.
Massively.
We have got to be able to share the right information with you as brokers, as borrowers, if they go directly. And you have to be able to communicate back to us, know your product. One of the frustrations that I have from time to time is that, unfortunately, some BDMs don't know their product that well. And it could be a whole host of reasons. I mean, again, because there's so many grey areas, it's like, oh, well, I didn't know that we couldn't do that one particular thing because it's never come up, but it's a peculiar thing. But for the most part, they're either young or this is what I think. They're young and inexperienced, or they haven't had sufficient training at the lending.
It's the training. So it's a few things actually, and and have I got it perfect? No, I've worked with some of the best BDMs in the whole market, and I'm thinking of some names now, but it would be unfair for me to name them because the other ones would want to shoot me then, wouldn't they? But I think it comes down to not interviewing first of all. So try and find the right character.
Yeah.
And that doesn't mean finding someone, because you're not always hiring someone, like you said, the young, who knows bridging inside out, because they could be the ones with the baggage. And because they've been to 5 lenders, and they always moan about those 5 lenders, there's only sort of one common denominator there, isn't there? The one for the BDM. So you can build one up right, but that comes down to the onboarding and how you onboard.
Yeah.
The way that I like to do it is actually find out how they like to learn. So that was a really interesting first question. Tell me about yourself in school. I actually asked a similar question. Tell me how you learned best at school, or tell me how you learned best at university or doing things.
I'm going to ask you the same question now.
Yeah, well, I'm very much a visual learner. So visual, I'll take in. But what I do for some of my team, and I was just thinking, I was recording one, where are we now, Friday, on Tuesday, is that one of them says I'm audio. I do loads of things in the car. So I record my pitter-patter for him so he can listen to it in the car.
So you've been doing like lots of video tutorials.
Yeah.
But then now if you actually convert it to audio.
Oh, but each people learn in different ways. So
and some people read those as well, so you can transcript what you're saying.
Oh, yeah, absolutely. You can do that easily, and it's just different ways. Look at. I've always thought about look at presentations, and if we've all been to that really bad, and we can think of loads of lenders, lender presentation where they put up loads of bullet points on screen, no visuals, and they put loads of bullet points up on. And then what they do is, instead of thinking, well, I shouldn't read it from them, so they're going to read that, and I'm going to talk around it in a different way. How is that information going to go in? So back to the BDM point, if you're bombarding them with, can you just go and read that credit paper manual that I've got day one, and you've learnt it then? They're not putting that into actually real life scenarios. So the way that you like to teach them is actually showing them inquiries, case studies, and show them, and I put them into folders before they start, and that's a good example of that one. That's how we build it up, and that's what we'll do. You won't know it day one, but just ring me. Don't say yes or no to Sam or George or whoever. Ring me and say, look, I am new, learning it, I'm really good, I think we can do this, let me just get Jamie on the phone.
You work with teams of BDMs.
Yeah.
Training them, we're talking about.
Relationship managers, we call them.
Is it relationship managers?
Yeah.
So the best way, in your opinion, for lenders to deploy their business development managers or relationship managers across the country, would that be nationally and just go with the relationship, or regionally? Because I find different lenders work in different ways, and some of them are like, oh, because you've got an office based here, that means you've got to use this BDM, but that was like, what? So
I'm really flexible with it, and I have a wry smile on my face because I've been really thinking about this with Michael and conversations. So in previous lenders, let's say I've had, I talked about Precise, where say I had a team of 18 to 20 dotted around the country, and at one point it was me and Roger running around the country, but I put them into regions, and that's your patch, because the bigger your sales team grows, the smaller their patches become, and the bigger your product, you do that. But I can't go past the fact that this is a relationship game, and you may get on with somebody better, and that may develop more business from that. So why would I just put them into these regions that someone doesn't get on with them? So I think there has to be some flexibility in my approach this way. And thinking really about the volume that comes through MS Lending Group, there's an argument where I should be more top heavy on the people that you can bring into on the desk, and then deploy the sales teams to come down to see you down, on the south coast. Now, do I need someone living in Portsmouth, or could I deploy someone to come down to Portsmouth to see you, and then wrap that around a few of appointments, and then I'm in that moment at the time? So what's the answer? I suppose the question back to you, Sam, is what do you prefer?
I always say I don't care where they are based. I care who I'm dealing with. I want the BDM that's going to give us the right answer the fastest. Interestingly, our company address might be our accountant's address. We've got an office in London. We've got an office in Hampshire. Mm-hmm. So they asked me which address, like, where are you based, so we can give you a BDM. I'm like, whichever office address you want to use to give me the fastest and best BDM that's the most knowledgeable and that's got the best communication skills. I'm not fussed. I don't care where they come from.
When I was at Principality, I shouldn't be probably admitting this on camera, but one of my brokers that actually does my mortgages for me, he always laughs that they're based in SK postcode for everyone that's just Manchester. But he goes, our address on a lot, like their system is still Chester, so you could fit them into your patch, don't you, James?
Yeah, exactly.
It's my home address that you put them into. All the BDMs are up to this game, by the way. When I've joined lenders before, they all go land matching and where they go. So I've got, I tell you what I've got people who are experienced on my desk who can be contacted. I have got a North relationship manager who, covers a big old patch. I've got a excellent account manager who covers all around the UK on accounts that give volume to ourselves, and then I've got others in London and around that areas. But I think what you've got with bridging is that you don't have such a big a team, so you can cover areas. And the biggest thing you've always got, and people use me for, is that they know they can always get me either on the phone, or I will get back to them if I'm not filming a podcast.
Or DJing, or making music.
Or making music, or DJing, in that order, Sam. I don't do that in work hours.
So the examples. So give me some examples, because here's the other thing as well. Like, some people think like bridging finance, don't do it, don't touch it. It's dangerous. It's like you lose your house. It's really, they'll come for you. Yep. It's rapacious. Do you have any examples off the top of your head where you think, actually, you know what, that bridging really helped that person, or you've got clients that likely like us that are repeat clients that use bridging really, really well? Because we've had bridging clients that unfortunately hasn't worked out for them, or it hasn't worked as well as they were thinking it was going to work, because in my opinion they've moved the goalposts. They've said, look, we're going to get this done and refinance in 6 to 12 months, and it hasn't happened. So then the bridging lender has either put them onto a default rate, or worst case scenario, they have had to repossess. And I'm like, well, you didn't do what you said you were going to do, so obviously that ends up happening. And
I would reckon they probably haven't communicated with you till the last minute then. So
even they have, but then the communication is, okay, well then now the goalpost moved from here to here. Okay, great. So then we wait for the next kind of milestone, and then it still hasn't happened, and it keeps moving. So it's like, well, what do you expect the lender to do? And I mean, these are extreme cases, of course, and then you get everything in between.
But they are real cases, and people should know about them, because you should, again, I use that phrase, you should go into it eyes wide open, because you should have your plan. It's a short-term finance. You need to get out of it within 12 months. So you need to have that plan in place, which good brokers like yourself will put in place. But life happens, they could... A great example of it to say it is COVID. What happens to your refurbishment properties when during COVID, you couldn't get any of the contractors on site, you couldn't get anyone on site. What happens at that point? That was fun times, when it gets to that. But I think it's not to be overzealous and think. So, definitely use bridging if it's right for you, if you've got your plan of, say, and bridging's not expensive, by the way, for everyone that says it is, if you're choosing the right projects. Because if the bridging cost me 20 grand, but I'm making 80 grand profit, guess what? I've just used 20 grand to make 80 grand. And someone says, yeah, but it's cost me 20 grand. well, let's just not do it then, and you
Make
don't pay out
zero.
anything, and you make zero.
And out of all the costs, including the buying of it and the refurbishment of it, usually the finance is the marginal cost of the entire project anyway. I always say that. It's like,
Absolutely.
come on, if the finance is breaking the back of the deal, maybe it's not a deal worth doing in the first place.
And so having that all in front, but don't think that you can do a massive, I don't know, commercial to residential 100 unit development as your first one. Start off with those residential properties, maybe up north or wherever you can afford the deposit for, and do those ones and build yourself up. Build yourself up, because you don't want to get caught out on your first or second one, because you'll never use it again, and you'll probably have to come up with some other way of making money for your job. So
Yeah, that makes sense.
lots of examples. There's lots of examples in there.
Because how many deals a month are you doing approximately?
At the end of August now, I should be over 70 at this point in time.
Yeah, so I mean, when you're at that level, and there's got to be some benefit to it. Otherwise, people wouldn't be like falling over themselves in a 30-day period to be doing that level of bridging loans.
What I really love about it is two facets to it. Is the repeat usage of customers using us. Use us. And I met a developer just earlier with yourself, and he said his first question was, "What's your rate?"
Is that what he asked you?
Yeah, he said, "What's your rate?"
Just for anybody that doesn't know, Jamie, doesn't normally happen, Jamie, but we went on a site visit to visit a 110 unit scheme, £30 million GDV before we kicked off. And this chap, before you even asked your name, maybe?
No. He's a lovely, absolutely really impressive.
He was a good guy, very
really impressive
guy.
developer. But I'm from this lender. I wasn't even doing a sales pitch, but the card came out and I gave him a card in that quiet moment. And he said, "Oh, what rates do you do from?" And I was like, "Well, I do rates all different places, but I deliver. That's the most important thing, and I deliver and get through them. So if you're chasing the cheapest rate, it may be because the service is not as good for that lender, It all depends on what it is. But
that's a sign of any good business when you got repeat customer.
Repeat customer, but repeat usage from brokers.
As well, yeah.
Oh, massively.
What do you think about, do you have any opinion on clients going direct or going through a broker? Would you, do you have a opinion on that in terms of how you'd recommend people?
So I deal with clients direct. So I do clients direct that have known me over the years. I have clients who come through, most of the business comes through brokers, like it should do, like it gets introduced to us. But again, me and Michael do know people out there in the market. Now, if a customer comes, this is, I think, more to the point, customer comes to a broker and I've got the deal in, and then they say, "No, I just want to deal with you direct." No, that has to still come through the broker that's introduced it. I'm not biting the hand that feeds me. And if they come back to me for subsequent deals, I will be talking to the broker and saying, I will be talking to the broker and telling them that it's coming through that way. So
yeah, that's fair. I think that's the fairest way to do it, to be fair. Current climate.
yes.
How should borrowers and brokers navigate through the current lending climate? Should they sit and wait for rates to come down? They seem like they're on a downward trajectory.
The crystal ball, the crystal ball. I think it depends on what their exit is, doesn't it? So, it's not about that, bridging rates and where they're going to be. You're going to be getting rates for a quick deal if you do it at, in your 0.8s and your 0.7s and your 0.9s and wherever it may be. It doesn't matter. You need to be getting that, if you've got an opportunity in front of you, but you say it's a really good opportunity that I can get for a good deal, but I'm going to wait for 2 months just in case something changes by 2 bips.
Yeah.
No, I don't think that's the way. It does come down to, though, the exit. So if your strategy is to flip them into your portfolio, will buy-to-let rates be coming down? Again, I haven't got that crystal ball, but generally the base rate looks like it's going in one direction at the moment from the last few goes.
Yeah.
I think what you just need to consider that with what the rate will be, yes, and what the profit will be, but what that actually allows you to do for affordability. So how that rate affects the interest coverage ratio or the stress test, as it's referred to.
You always factor that in if someone says, I'm going to buy and hold as the exit.
Yeah, but again, if they're going to buy and they're going to sell it as an exit, we do obviously a proper underwrite, but if you say it's going out there, our underwriters know exactly how that's going to be refinanced and they'll find a way. So my, of course I'm going to come from this from a sort of slightly biased view, but I just gave you the figures a moment ago. investors are not sitting on their hands, and there's not enough properties out there. So if you're sitting around waiting, someone else is actually doing.
Makes sense to me. What about the philosophy of a lender's position, in your opinion, of do they back the jockey or the horse? So some people say, I don't care about whether the borrower is the best or the not. I'm just looking at the real estate. If that real estate's really good, I'm going to back that real estate. Some say, ooh, I'd rather have a really, really good person that I'm going to back that knows their stuff with a pretty average asset and take a risk on that side of things. So do you have a preference yourself personally?
It comes down to the deal. It really comes down to the deal. So if I've got, I don't know, thinking of our developer a minute ago that wanted to do a 110 bed scheme, but that was his first project. The asset may be amazing, but I'm starting to really want to know then who he's got behind them doing that, he or she's got behind them doing it. The asset's important, really, but I can look at customers if they have got blips on their credit file, if they're doing it, if they're first-time buyers, first-time landlords, in that sense. Yeah. So I can look at that. So that doesn't mean that's the strength for the customer. That does come down to the asset.
Yeah.
I think, the larger the asset becomes in value, that's where you want probably a little bit more clout behind them and experience. Yeah. But what a good lender like ourselves does for those larger projects is do an all-parties meeting as well. So whether it be myself, Michael does it a lot, Michael Stratton does it a lot, where they'll meet with the broker and the sponsor of it as well. And I think that's for everyone to get comfortable with each other. So that's not just for us to get comfortable with them. This is a three-way sort of street between the broker, customer, and ourselves. Yeah. When they come and see us in our offices, invariably they go, this is amazing. Look at what you built up and look where it is, and it's a proper operation, not out of a back office somewhere. I think that gives them confidence as well.
Absolutely. I think, it's funny, I get different answers from different people, but I think sometimes the answer can be quite telling. I think that people that just purely asset backed, then they're almost like, I don't mind owning that asset.
That's exactly.
And that kind of, it tells the story. Like, it doesn't mean you're not going to lend off them. It just means to make sure you pay them back, because they're not going to maybe give you a free ride or not free ride, but certainly more lenient when shit hits the fan.
We like everyone redeeming, in time. Because guess what? They'll come back and use us again.
Exactly. The repeat business is the best business. Whether a broker comes to you with a case or somebody comes direct, in terms of packaging a case, what sort of information, what level of detail do you require to be able to make an informed decision?
Okay, so it's just and it depends on the deal, but I'll give you sort of all the little things that we want. So we want to know what their assets and liabilities is. So whether you've got that and you're a good investor and you've got that on a spreadsheet, or you want to fill in our document, whichever way suits you. A 2-page application. I know there's some horror stories of 20-odd page applications out there, isn't there?
Yeah. There's some crazy stuff out there which I push back on.
Yeah, so 2-page application in that sense. If you're doing works to it, a schedule of works of what that will be, just to give us an idea of what the costings are. It doesn't have to go down to the penny in that sense, but an idea of what that kitchen, bathroom refurbishment will get you from there, and just the ID, which will be either their passports and their bank statements. To be fair, other than that, not a lot, because if you're getting onto that, we're doing a desktop valuation. We'll see whether you've got all the information on the sales particulars. We may ask for photos. We may ask for a few things from there, but there's not a lot more that we need from you.
Very good.
How bridging should be.
Yeah, exactly. I mean, through a full underwrite, once you kind of like, these are the terms, I'm sure other stuff may come out, and you certainly get into valuation, things might come out in the valuation and other questions get asked. But just that initial presentation, like what is the asset? Who is the borrower? What's their assets and liabilities look like? What's their net asset value in the background? To make sure if there is a cost overrun or something, they've got something about them. And ideally track record to see that if they've done stuff before, or they're going to be first time. MS does first time landlords, first time borrowers. So that's pretty much on the same page, how it should be done. And then I'm sure you've got your underwriters, which will.
But the underwriters will pick up the phone, so they're not going to send you an email with, you name the number, 20 points that are outstanding. That screams of, if you wanted that information, ask for it up front on an application form.
Yeah, exactly.
Or just pick up the phone and just talk through the case. Because you as a broker will know about the case more than the underwriter does.
Yeah, exactly. We would have talked it through at least 3, 4, 5 times by the time it gets to a lender.
But you would have talked it through with the sales guy who would have positioned it, and we'll, that's the terms. The only things that will really should mess up those terms and the deal going through, which is very rare, is the aforementioned valuation and anything that comes up on legals. But even then at legals, we're going to try and work with you on what it could be. That's
yeah, exactly, absolutely. What's one myth about bridging finance that you'd love to shut down for good?
It's torn between two, that either A, it's too expensive, or it's a last resort lending. I think it's a real good tool. So I'll go for the latter. I think it's a really good tool for customers to utilise and put in their arsenal for either speedy transactions or just when they know that there's a good, say, for example, commercial building that they're going for an asset, but they just know that commercial finance is going to take quite a long time to do. So you can use it really as the first choice and get in there quickly. And it allows the customer to then act like they're a cash buyer. Good bridging is a cash buyer in that sense. So I'd love to undo that myth, really.
Yeah, I agree with that, actually. I used to say that a lot as well. Good bridging is as good as a cash buyer. Because most cash buyers as well, you do get some that will just do it without any searches and just put the money straight down. But most people will still do some level of due diligence, which takes about a week or two. So a bridging loan can usually get done in a couple of weeks comfortably. So it's about more or less the same, especially if you've got a good relationship with that bridge lender and you can rely on them.
Yeah, one of my sales guys actually said to me the other day, he goes, he actually said it this morning in the car, he said, high net worth customer, he goes, he wants a bridging loan. He goes, it always makes me laugh, high net worth customers, but they want bridging. I said, don't you know? I said, the rich use debt brilliantly. Just because they're high net worth doesn't mean either they're caught up in their investments and they don't want to do it, but they're using debt to buy property either quickly and they don't want to put all their cash into it.
Yeah,
it allows them to buy multiple assets at one time. Look how the ultra high net worth are doing it. Look how you're doing it, Sam.
Far from that at the minute, mate. But it's true. I mean, Jesus, I've worked with some pretty impressive clients at the moment. And if they were to liquidate everything, the capital gains that they'd have to pay, 40% here and there, is 38, 28%, whatever it is. Compared to just borrowing that money at 5, 10%, it's a lot easier for them to go and take that money, turn it again, and can keep growing it. So I do agree. I think that it's not. When it comes to auction finance, for example, rundown properties, it is the only type of funding available. So you have to just get comfortable, feeling uncomfortable potentially. What's the best bit of advice you've ever received?
It's probably that. Actually, I'll just change it. I was going to say it's the phrase that I use all the time, which is "stay in my lane." Yeah. So don't look at others and try and compare yourself because you're built differently. You've had different education. You've had different everything. So just stay in your lane and back yourself. Yeah.
Stay in your lane, which is what the guy was saying as well earlier today. He's doing these large blocks over 1,500 square meters, and we were talking to him about a few different other sites, and he was saying, "No, I just like to stay doing what I do."
But I suppose the best I've always been taught, and my dad and all that, is just be nice and stay humble. Just be nice and stay humble. We're in a business where I've seen brokers shouting and screaming at underwriters, and the next minute they get on the phone to me and they're all nice. I'm like, don't treat me any different or them different to me. They're more important than me in that scenario. So I'm always nice. This industry's a village. It's an absolute village. Do you know what I mean? So,
yeah, it is.
You've got to I always stay nice and be humble because there's always someone better than you.
That's very good advice. What is the worst bit of advice that you've received?
Worst bit of advice, did you say?
What's the worst bit of advice you've ever received?
Buy that property. There was that one in particular. No, I don't know what the worst bit of advice is because I don't think you ever fail, do you, really? I don't think you should fail. You just find new ways of doing it.
I always say that you either win or learn.
Yeah. I can't think what the worst bit of advice is that I've had.
That just shows how much of a positive person you are.
Yeah, hopefully. I'd have to go a long way to think of that.
Well, let us know. We'll put it in the show notes
Yeah,
after.
that'd be good. Got me thinking.
This podcast is called Property People.
Yes.
It's all about two of my favorite things in life, property and people.
Yeah.
And, we talked about relationships and everything else before, but to be successful in property, and you certainly are with 20 years of experience, just out of interest, MS Lending, what's the minimum, maximum ticket sizes they do at the moment?
So no minimum loan. On our website, it'll say £3 million max loan, but we do loans that are larger than that as well.
So we're putting out that level of capital for that long, and all sorts of the stuff that you've done, because I know you've done much bigger stuff at previous places.
Yeah.
My question to you is, to be successful in property, what kind of personality or characteristic traits does one need to have to be successful?
You have to be resilient. You have to be... I don't think you have to be fully knowledgeable. So someone that has to think they know everything, they just need to have a great team around them and people that they trust, they can lean on. I think they need to have a little bit of that, can I say balls about them, really?
Absolutely.
But ballsy for a woman and a man, about it. So it's, if you're risk averse, this is not your game. I don't think property, and I know that we talked about earlier, but I definitely think always have a plan B.
Yeah.
I do. When I heard that said earlier, I think you do need to have a plan B.
I think you did have
things.
it, but it's all these philosophies of life as well. It's like, because I say it as well, don't have a plan A because it distracts from plan B. But I usually don't listen to that advice entirely. I always have in the back of my mind something, a plan B or C. So yeah, and especially I think when it comes to bridging, every bridging lender needs to know that you've got a plan B, which
It's
usually
contingent
is
exit.
contingent. Like if I can't sell it, I'll rent it. If I can't rent it, I'll sell it. Just that simple thing is quite powerful in itself.
Yeah, so I think it's just, and probably if you're thinking of getting into it, it's lean on good podcasts like yourselves and the different areas and the different material that's out there. There's arguments that you probably don't need a property course. And I'm not arguing against them, but I'm just saying you've got enough material out there.
Have you ever done a property course yourself?
What? No, I used to run them, didn't I? But I used to run them for free for first-size mortgages. And I'm doing lots of landlord courses that I'm developing at the moment and different things. And they're just about information. It's out there for free.
And the information age these days, since the
you can use AI. If you're on ChatGPT, you can ask it. As long as you're searching and putting the right prompts in there, you can learn as much as you want just through AI.
How is MS Lending embracing the AI revolution?
We do AVMs, so that's an AI of sorts, isn't it? I think in there.
Do you think Do you think AI is going to change the landscape of lending, like artificial intelligence underwriting from start to finish?
AI is definitely going to help with information gathering. I think from the sort of data's the new gold. So I think whether that be scraping, whatever that may be, or different ways of contacting, all of those tools, I think that will be in there. I think automation of processes. I always talk about AI shouldn't be seen as a threat. It should be seen as something that helps make your processes more efficient. Because what I'm still finding is brokers, customers still want to talk to the person in there. But it will definitely help us. We're bringing in new tech systems that will be definitely able to help out with the system. But I've seen some really good tools where it can really help with some of the valuations and just maybe even your due diligence that can help a real underwriter. I don't think I'd want a robot making the full decisions for my bridging cases at the moment because I'm that flexible on them. So how am I going to feed that into an algorithm? Now, Elon Musk would tell me that's easy, but I
don't know. I think at the end it does need a human to maybe sign it off, and maybe you could do more with less, and that might be the thing. So I think I was speaking to Michael Dean from AVMs, and he was saying that we don't necessarily need to cut the team, but we might not need to hire many more people to do the a higher volume of business.
It's one of the age-old things, Michael's a great guy, and we talk about in all circles about sometimes the solution used to be throw more full-time employees, FTE at it, more full-time employees. But if you can make a process more efficient, you're keeping those who are really important to us in your team
really good,
happy and with you for longer.
Absolutely.
So I think there's something in that.
Yeah. I think that's the way the future will go, actually. I don't think you necessarily... They're talking about, the first $1 billion company with one employee because you've got so many AI agents working for you. And that's I think that something within that realm is where we'll end up.
Look, I've been a BDM in the age where at Principality, brokers used to, because we're on a podcast now, they used to brag to me that I don't have a website. They used to say, and look at my filing cabinet with all my customers in it. That seems like the dark ages now, doesn't it? Compared to where we are now, where you don't have a social media presence, or and you're saying as AI got into lending, you only have to look at people's LinkedIn posts to realize that AI is definitely in some form of lending at the moment, writing people's posts.
Exactly. You just got to look out for the hype.
The big large dashes, large dashes is where it's at, and the Zs.
All good. Well, you know what? I've really thoroughly enjoyed this. We will definitely be doing more stuff with you, including some site visits on some of the stuff that we're funding together in the near future. And I just wanted to thank you for traveling all the way here. We've jumped around a lot, covered a lot of topics, and there's still so much more we could have driven into. But thank you, Jamie.
Thank you ever so much for having me. Cheers, guys.